Gold prices are on the rise on Wednesday, finally gathering a little bit of momentum as we approach a key level of resistance in the yellow metal. The ascent so far for gold has been extremely gradual, despite the fact that many of the fundamental factors which would typically drive gold have very much been there. The most obvious of these is, of course, the amount of stimulus that we are seeing pumped by central banks at this moment in time. We're seeing unprecedented amounts of stimulus, trillions of dollars added to the Federal Reserve's balance sheet. The Bank of England has dramatically increased its bond buying program as well. The ECB increasing its PEP program, which is very much targeted at the pandemic. But the Bank of Japan and many others also dramatically increasing their bond buying programs. Historically, this has fed into higher gold prices, the additional stimulus that we see in the financial system ultimately having to go somewhere, and the fear around the potential inflation consequences typically does make gold look very attractive, gold being the traditional inflation hedge. But it's been a far more gradual process over the course of the last 4 months, even though we are still gradually ascending. And the main reason for this has been the role of the dollar as a safe haven throughout this time. The dollar has been a preferred safe haven, and ultimately when gold is priced in dollars, a stronger dollar makes gold more expensive for non-dollar buyers. So gold priced in dollars has just taken that little bit longer to climb towards this $1,800 level. We're still a couple of hundred bucks away from the just shy of 2,000 level, which it peaked at after the global financial crisis. But this $1,800 level could be huge. As you can see on the monthly chart in front of you right now, we haven't traded at these levels since 2012. So we're coming on 8 years since we've last traded at these levels. But in 2011 and 2012, we tested these in 3 separate months. So we've tested this level on multiple occasions since it broke back below this level. Each time 1800 was a severe level of resistance. So that is likely to play into the psychology of traders as we approach this level once again. And I feel it may have already been playing into the psychology of that level, because each time we've come even close to that level up until today, it has run into a strong barrier of resistance, maybe some profit taking, maybe even sellers jumping in at this level as well. So this has been long been an interesting level as far as the upside is concerned. When we look at the daily chart, which is now on the screen, you can see that we have seen gold struggling for momentum over the course of the last few weeks on any rallies. It seems that they have just run into immediate resistance extremely quickly. But we are seeing signs that we're potentially seeing a little bit of a pickup in momentum on this occasion. That doesn't necessarily mean that we're going to snap through $1,800 with ease. In fact, given how gold has traded, I'd be very surprised if we do so, unless we see a significant drop-off in the dollar, making it that little bit more desirable. Given the momentum we've seen up until now, I still think 1,800 is going to be a significant area of potential resistance for gold. If we see a pullback, then the 1775, 1780 level may start to look interesting once again. A break through 1,800, and I think crucially after this amount of time, a day or even a weekly close above that $1,800 level could be extremely bullish as far as gold is concerned. And potentially get gold traders that little bit more excited. And the excitement is one factor that's really lacked in this kind of gold rally, which may sound quite incredible when you consider how far it's come over the course of the last 18 months. But given the time it's taken even to achieve a $200 move throughout this pandemic, isn't really fitting with what we would typically associate with a safe haven instrument like gold, with an inflation hedge like gold. But like I said, the dollar has really held it back at this moment in time. Perhaps the prospect of more stimulus from central banks around the world, particularly the US, is one of the things that could potentially get it over this $1,800 level. And we are hearing sounds from policymakers for the Federal Reserve once again that more stimulus may be necessary. States around the US, particularly in around the Sun Belt, are being forced to either pause operations to reopen the economy or even reverse them because of the spike that we are seeing in cases in a large number of states, a growing number of states at this moment in time. If the Fed is going to step in again, that potentially could weigh on the US dollar a little bit and give gold that extra little lift. And again, with gold's lift, $1,800 will be extremely crucial, I think, as far as traders are concerned, and a break above here could create some bullish momentum once again.